How are you feeling this morning? That was bad, wasn't it? A weekend of red, a weekend where things just seemed to keep descending lower and lower and lower. The panic was on the streets, and with good reason. This time it was Huobi scaling back its operations due to the China crackdown. We had Bitcoin falling to 31,000. We had Ether dropping to as low as $1,700. And it's a kind of stark reminder of how quickly things can move in this space because, gosh, when was it that Ethereum was trading above $4,000? The 12th of May, $4,309. And everything seemed great. Everything seemed like it was only up. And of course, that is not the case. Everything, at least at some point, has to reset, has to come down. And you could say this was long overdue. You could say that all of these catalysts have just arrived at this moment in time, and that is just the way it falls. That is the way it does fall sometimes. And so many things to talk about over the weekend. But let's take a look at the DeFi market cap. So at the present time, it is sitting at $70 billion. And you look at this graph and it is just dropped so sharply. This lovely, beautiful trend going up and then topping out at $149 billion. When was that? The 12th of May. Barely 10 days ago. And then dropping now, just like a stone. Now, does this mean that DeFi is dead? Does this mean that crypto is dead? Well, no, of course not. And we'll come back to why that isn't the case in a bit. But I think the main thing to do here is just not panic. These things happen. And it had probably gone up too much, and now it has gone down too much, and hopefully things will just balance themselves out. Because this is an emotional market, an irrational market, and things tend to overextend in both directions. Now, the interesting thing about all of this is that one of the big issues about the China Bitcoin mining thing is that apparently most of the mining power is centralized in China. Now, I've seen articles from 2020 that estimated that around 65% or so of the power in Bitcoin, the hash rate in Bitcoin, was actually concentrated in China, and most of it in Xinjiang. I hope I pronounced that right. So there's this fear that Bitcoin is heavily centralized in China, and that, of course, any news about China disproportionately affects the whole market. And I did a bit of digging around on this, and the data around it is very hard to find, and it's due to a couple of different reasons, one of which is miners tend to be quite covert in their operations, and they tend to use power arbitrage. So they will go to where the power prices are the most favorable, depending on what's going on in the market, how expensive coal is, for instance. But there seems to be a sentiment that Bitcoin miners are liquidating their positions and moving their mining operations elsewhere. Don't have a huge amount of proof for that at the moment. But one of the other interesting things was I looked at the global Bitcoin nodes map on bitnodes.io. And yes, Bitcoin is heavily centralized in terms of its mining power, but on the map, the number of nodes are more heavily centralized in Europe, like heavily centralized like in Germany, and of course in the United States. So there may be a ton of mining power in China, but the global distribution of nodes is centralized elsewhere. I always find that kind of fascinating. But of course, if we look at the map, you can see that, again, there are sort of three areas of the world in which Bitcoin hash power is clustered, and of course that's not that decentralized, but it's it's better than everything being in China. So that's an interesting statistic. Now, if we look at the DeFi Pulse TVL chart for DeFi, I was looking at this on Friday, and we were looking at around $60 billion in TVL, and it did bounce. Had a lovely little bounce here, going up to, it's hard to see on this map, but if we look at the top was around just under $90 billion. And then it drops to where it is now, which is $50 billion. And that's a lot. That really is a lot. Funny thing is, though, I went back and looked at some of my old videos from last year, particularly the one about Curve Finance. And in that video, I talk about how successful DeFi is being and how much value is locked up. $7 billion. 2020 has been, without a shadow of a doubt, the year of DeFi. The explosive growth in stablecoins, liquidity provision, composable protocols, and of course governance tokens has meant the brave, the lucky, and the downright degenerate have had one hell of a year. Now, one chart that I did look at that was kind of interesting was the crypto dollars chart. So this is the chart that measures how much money is going to stablecoins. As you would expect, it's it's going up, but it's going up in a way that shows you that money isn't fleeing from stablecoins into fiat. There is value still in these stablecoins, and it's still going up. So whatever people are doing, they're retaining most of their value in crypto in some form or other, and usually in stablecoins. So obviously a huge amount of it is clustered in USDT, but that USDC, $19 billion worth of USDC out there. Crazy. So it would appear that money is not fleeing to fiat, money is fleeing to stablecoins, and presumably it will come back. Now, this morning we had a bit of a bounce. I tend to be a little bit suspicious of Monday morning bounces because they can easily be sold off, particularly by people who are fearful. They see they're like, okay, well, I can take 10, 15% bump on what I would have sold anyway, so let's take that. But Bitcoin had a nice little bounce this morning, and it seems to be doing its thing. Volume is rising, but again, I am not a trading channel, so let's not make too many predictions or pieces of analysis over that. But this crypto dollars chart, I think that's kind of interesting. So one of the big catalysts for all of this was Elon. Elon saying Tesla would no longer accept Bitcoin on environmental reasons. We also had Jack Dorsey with a counter trend saying, oh, actually, you know what, Bitcoin's not so bad for the environment. I mean, who knows? There is a tweet from Elon. Someone asked him, yo, Elon, what do you think about the peeps who are angry at you because of crypto? His response, the true battle is between fiat and crypto. On balance, I support the latter. It's a very non-Elon thing to say. No emojis. No emojis from Elon. Is he actually being serious for once? Well, it's hard to know. What we do know is that Tesla had an enormous amount of Bitcoin on its balance sheet. The drop in the Bitcoin price means that balance sheet will affect Tesla's Q2 earnings report, and that has a big effect on the Tesla stock price, etc., 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 etc. Elon's no fool. He knows that he needs to play the game a little bit. Now, one of the other stories that really jumped out at me over the weekend was DeFi 100. Now, there were a bunch of news sites that were reporting that DeFi 100 had exit scammed, that it was on its way out. Let me just show you what that looks like, because there was so many news outlets ready to jump on this and say that it was an exit scam and report. Okay, so here we are on CoinDesk. People behind crypto protocol DeFi 100 may have absconded with $32 million in investor funds. A not so classy message on the DeFi 100 website told investors they've been fooled. So basically what happened here was the website got hacked, basically. And a message was put up which said, we scammed you guys and you can't do shit about it. Ha ha, all you moon boys have been scammed and you can't do shit about it. Dev sin. So the DeFi 100 price hadn't been doing too well, but then nothing had. And the website got hacked. And then there was this piece of fake news that $32 million had been taken. It turned out that wasn't the case at all. Now, I'm not going to rush to judgment on this because we don't have all the facts, but DeFi 100 themselves said the highest market cap this project ever had was less than $2 million. And the project never held any investors' fund. Rumors of scamming for $32 million. I've lost my light. Are false and baseless. They did admit, yes, our investors faced huge losses as project failed to achieve what we hoped for, but there is no exit scam. We're still working on finding a way to bring the project back on its feet. So I don't know what's worse here, whether it's the news desks just jumping on this news and reporting it with glee, because there was a lot of glee. It may have been Mr. Whale who says, breaking, DeFi 100 coin exit scams and runs away with $32 million in invested funds. And then he goes on to say, reminder, as the bull market fades, many projects will too. Expect a huge increase in exit scams over the next few months. Never invest in projects that are very new with anonymous teams made as memes and have a lack of real utility. Stay safe, everyone. Yeah, I mean, there's a lot to unpack here, but he's basically saying that the bull market is going to fade in the next couple of months, and all of this is going to evaporate. Never invest in projects that are very new with anonymous teams. DeFi is full of anonymous teams, and that's the world we're in. So, it can be very difficult to understand what makes up a good team or not. We have Andre Cronje, who is very much not anonymous, but that's the exception. And as we've seen in previous videos, there are projects which say, as part of their USPs, that they are anonymous teams. Yeah, well, there's nothing wrong with saying, don't invest in crap, don't buy crap, because it will evaporate faster than yesterday's milk and go bad, so bad. People never learn, and they will jump on anything that seems to be going up. You need to get wrecked a few times before you can really understand what your limits look like. But in terms of DeFi 100, let's see what they do. But yeah, that one was bad. And I feel like news organizations need to hold themselves to higher standards. There, I said it. So one of the other stories that jumped out at me, because it's from my country, was Tom Tugendhat, who is the MP for Tunbridge, Edenbridge and Malling. And he's the chair of the Foreign Affairs Committee, and he was in Parliament talking about the flippening.
This bill, this speech, does not cover the changing nature of currency, the changing nature of the economy, and the innovations that we're seeing online through various forms of cryptocurrencies. I'm not going to go in the few moments left to me, of the flippening and why I'm going to be bullish on Ether and not Bitcoin, or the nature of the change in the Treasury that is needed to enable innovation that sees the sharing of prosperity on a global basis.
So he says, we're seeing the flippening from Bitcoin to Ether, and we need Her Majesty's Treasury to help create space for UK innovation and our legal system to learn what's needed in a new economy. And quite apart from the idea of a well-spoken, bespectacled member of Parliament using the word flippening, this is wild. He stood up and with a straight face said the word flippening, because I guess he sees that the UK has a place in the future of money, and I guess all of these governments are worried that they're just going to be left behind by this revolution that we're seeing. But it was pretty funny. Any talk of the flippening, you should take it with a pinch of salt. Anytime I see the word flippening, yeah, it worries me. It worries me because it's just not important. It's what's being built, who's using it, and what value does it create for normal people? I don't know. That's just me. But anyway, good for you, Tom Tugendhat. Good for you for saying the word flippening in Parliament. Good for you. Now, I just want to finish on one last thing, which is it can be very difficult to understand what's going on out there. Information asymmetry, cognitive dissonance, they all play a part in how you read the market. And the fear, the gut-wrenching fear of seeing everything evaporate and drop is horrendous. I hodled through a long-ass bear, 2017, drop, to all the way to 2020 when things started to pick up again. And if there was one lesson I learned during that time, it was that the market cycle is the market cycle. The market cycle never changes. The market cycle will do its thing and do what it must do, no matter what you throw at it. And my read on this at the moment is that we are kind of halfway through the market cycle. We are not far enough away from Bitcoin's previous all-time high. We haven't spent enough time in that zone for this to be truly called the end of the market cycle. So my read on it is that we're fine. However, my read on it also is succession planning, where to go next. That's why I spend so much time looking at stablecoins. That's why I spend so much time looking at things like Anchor Protocol, where I'm thinking about where I will move money next if I'm looking for safety. In a stroke of genius, my microphone ran out of batteries. I was in the middle of a rant. I was just talking about the market cycle, how it just is what it is. You can't escape it. You can apply all sorts of analysis about fundamentals and technicals and everything else, but at the end of the day, the market cycle is the market cycle. They call it the Gartner hype cycle, whatever you want to call it, the Wall Street hype cycle, all of these things. It just is what it is. So you can't escape it. And every time you hear someone say, this time is different, look at what's changed, look at where we are now, all of this, it doesn't make a blindest bit of difference. Now, I wanted to have one final look at Anchor Protocol, because we picked it up on Friday. Because I kind of use this as my bellwether for what I will do next, how a bear market will look. And if we look at the earnings side of the Anchor money market, the target rate is 20%, and now it's at 18.55%. But if we look at the borrow side, well, this morning it was 230% net APR. It's dropped to 215%. But again, they're heavily incentivizing borrowers to jump in and help rebalance this protocol. So if you're looking to be aggressive in the market, that borrow side. I'm not ready to jump in yet, but I think tomorrow we'll do a tutorial on exactly that. But in the meantime, you might have noticed I have brought out the guitar. And that's because I was watching the Sushi Swap video I made last year over the weekend. And at the end of it, I sang a song. And the song seems incredibly appropriate today. This time is different. This time is right. Get yourself some crypto. The future's bright. Have a great week.